Hello traders, Gary Wagner with the Gold Forecast here. It is 6:45 a.m. in Honolulu, Hawaii on Friday, the 8th day of April, and this is the Daily Report. History in the making, history in the making. We currently have gold trading 1472, 1473. We have had a high of 1474.40. That's at least what we're reporting here. Incredible activity in gold and silver, in the precious metals as a whole. Platinum up $25, 1805. Palladium up $19, 792. Silver up 86 cents at $40.50. This has been one incredible day. Traders, we are looking at our daily chart. Of course, you're familiar with this because we have our channel lines as well as our Elliott wave. We'll talk about that in a little bit. But what I've also added here is a Fibonacci extension. We touched briefly on it yesterday, but I really feel that it warrants our investigation once again. And here's what we're looking at. Let me blow that up for us. This extension is an extension of wave 1. So that the points that I'm using are the bottom, the beginning, and I believe this is that low that we saw as wave 1 up to the top, and this is where the extension begins. Now, let's take a look at the various levels. We are currently up against this 23% level, but realize this 23% level is actually a little bit different because when you consider the fact that this wave 3, starts at our low and moves to our high, and this extension begins at wave 1, of course, the difference is that corrective wave or wave 2. So you have to account for that also. But I find that the numbers line up very interestingly because what happens is this particular retracement will account for a Fibonacci percentage of this overall move. It works out quite well. So that my sentiment right now, of course, I personally think that this wave is going to take us over $1,500. We've also talked about the fact that I believe that what we're looking at is a complex wave, so that in terms of our minor count within wave 3, this is all within this wave 3, 1, 2, we're on our third leg right now. My personal sentiment is we'll probably get 5 legs on this particular impulse wave, wave 3. Traders, we are looking at a 240-minute Japanese Henkin chart. We looked at this yesterday. What we are looking at in terms of the strength itself of the trend, you can see that it had this tremendous burst. And of course, when we're looking at this, we're looking at 4-hour bars. But these tremendous bursts right here, you can also see right here at this point, and this is very, very short term, of course, that you are getting a consolidation, or not really a weakening in trend, but the trend itself is slowing down a little bit. Traders, as we do this report, as I said, right now it's approximately 10 to 7. We still have a good 4.5 hours of trading this week. So anything really can happen. But when we consider the fact, when I look at this daily chart, this is candlestick format, and this is our basic extension that we looked at on our last chart. What I'm finding interesting is if we follow this one channel line up, and at the same time, we look to see where this 23% level crosses that channel line. It happens right at this point. Now, is that a coincidence? No. But at the same time, we are going to run into different levels of resistance. And because we're in uncharted territory, as I've been speaking about yesterday, it's really very, very difficult to be able to use standard technical systems for support and resistance when we have absolutely no history to base it on. In fact, it's highly unlikely that it can be done at all. So what I find is that we do have a couple of very, very strong technicals that we use that will kind of point the way for us. The first, of course, is these Fibonacci extensions. Fibonacci extensions, in the same way that retracements work, look at that natural cycle. Second, Elliott wave. We're looking for certain waves to go to roughly certain areas. And then lastly, candlesticks, because we will get certain patterns as we hit tops in the market, tentative tops, and we'll get bearish reversal indicators, which will tell us that one part of the wave has ended and the other one's begun. And of course, what I'm looking at right now, I believe that we are in wave 3. It's a complex wave. This was the minor count 1, 2, and we are on our third count here. Wherever this ends up, whether it ends up here or whether this is the point in which the market corrects, I personally feel at this point that the target that I've been looking for, that 1500, 1508 area, and of course it is based upon many factors, but one primary factor is the immutable law within R. N. Elliott's wave theory, which states that wave 3 can never be the smallest of any of the 3 impulse waves, waves 1, 3, or 5. Therefore, it seems highly unlikely, if this is going to follow within Elliott wave doctrine, and I have no reason to believe that it will not, that this particular wave 3 should track at least about $130. Considering it starts at 1380, we get about 1518. And when we look at our different extension levels, the closest level to come to the 1518 is this 1508, and that's where my target for 1508 actually came in, was this particular research. Traders, obviously, we have a great position. On Sunday, we will absolutely talk about raising stops. Those of you who listened over the last few days have probably added bits and pieces to scale and make that position a little bit larger. I think that right now, as I said, with the last 4 hours of trading, we could get the market selling back, profit taking before the weekend, but there's no doubt we've witnessed history. This has been the strongest close in gold I have ever witnessed, and of course we're at record tops, and we have been long this market for a nice ride up. This has been Gary Wagner, wishing you, as always, good trading. We'll talk to you on Sunday for another daily report. Bye-bye.
When I look out my window, many sights to see. And when I look in my window,